Today is Thursday, June the 20th. And here's a look at the markets. Everything's coming up green. We had advancers leading decliners by 67 to 28%. So that is going to push the oscillator even higher. We had the Dow pop, then drop, then finish the day up quite strongly with pretty reasonable relative average volume. We had the NASDAQ drop at the open, recover a little bit in the afternoon, ending up positive 0.8%, and the S&P 500 ending up almost 1% on average relative volume. So that's really a good sign. The oscillator today started very close to oversold, the top of the overbought range, and I would think that today might be enough to push it up to this line. We didn't quite make it the last time before that in February. We did make it to this line for a few days. We chatted around there and then we dropped. Money started coming out of the market. So it's going to take, we have seen bullish money momentum moves in the oscillator. But this is after the market had suffered a very steep drop in the fourth quarter last year. It came roaring back, and the money probably just flew in a little bit too quick and then started to peter off and slow down. So let's take a look at some of our stocks today. I think the main thing we want to watch here is want to look at, first of all, is the S&P 500. This is the monthly chart, and you can see that we have been at this high level 1, 2, 3, 4, 5 different times, 5 different months since September of 2018. And if you look at the Bollinger Bands, which contain 95% of the moves, we are at the top of the Bollinger Band. So we only really have a little bit more to go before we hit the top of the monthly Bollinger Bands. If we look at a weekly chart, you can see that we finished the day, I think they called it a new high, and it's a new closing high, not a new high, although I guess we did hit a new high with this tiny little peak here, but we had a new closing high in the market. There's still some room to move. As you can see, the Bollinger Bands are starting to open up here, and there's still some opportunity to move upwards. You look at the stochastics, and the slow-moving stochastic over 40 days as starting to top out, but the fast-moving stochastic, which is a 12-day stochastic, has made a sharp turnabout, and there's a very good possibility that we see new highs. Taking a look now at Apple. I said at the beginning of the day that I had covered 500 of my shares with the weekly 200 calls for $1.16, and I was confident today that we wouldn't break 200, and I'm confident that tomorrow we won't break 200 as well. It's just a difficult point to cross, and I think there'll be sellers waiting at 200, and it's going to take a while before all those sellers get exhausted and we make a run up to our previous highs and up to try to fill this gap here. Remember, Apple loves to fill gaps. We've got one down here that has to be filled, but it's far enough away that I'm not going to put it on the chart yet, but we do have to keep an eye on that one. This gap way down here is going to be filled someday, but just not anytime soon. If we look at one other thing I wanted to point out in the S&P, I think it was the S&P I was looking at. If you look at a daily chart, no, it wasn't the S&P. Let's go back and take a look at Apple again. It was a chart that I was looking at today, which I thought exhibited signs of a potential inverse head and shoulders. Maybe we'll come to it. It might be Caterpillar. So let's move on to Caterpillar. Caterpillar had a huge day today. And anytime there's good news with China, even good rumors with China, Caterpillar is going to respond. Caterpillar was able to move into the weekly cloud, and the Chiku span is in a nice zone right here, and it's got room to move up to the 200. So I'm thinking Caterpillar on a weekly chart has an opportunity to move further. And I did tell you yesterday I got back to a full position on Caterpillar after taking some off before the Fed announcement. But we finished up over the 200-day EMA. So we're headed up to this level here, which is the top of the cloud, a flat cloud at about 135. And that will be the Chiku span's resistance on the 200 SMA. We've got a whole cluster of moving averages right here that'll help Caterpillar chat a little bit as it tries to break out of this cloud. But Caterpillar is going higher. Gold miners has been our brilliant play. We've held on to this for such a long time as a hedge against everything else and a hedge against the dollar. And look at this move today. It created a gap on its open, came back to fill the gap very perfectly, and then took off to finish just a little bit higher than the open, but much higher than the close yesterday. So GDX miners has been fantastic. WDC up 2%. So again, a China-related stock. And Whirlpool was a little disappointing. I doubled my position in Whirlpool, but this time instead of having the 140 short calls, which expire tomorrow, I took the stock and the 145 short calls expiring next week, June the 28th. And then there was this pullback. I really thought that we had the momentum to break the trend line, which started way, way back. Let me try to see if I can. I need to free up some memory here. Too many. I'm running short of memory. But anyways, we've got this trend line that starts back here, 2, 3, 4, 5, 6 days on the trend line. I thought we had enough to break out. Let's just take a look at the volume and let's see if we had any telltale volume in Whirlpool today, and we didn't. We had a very low trading volume day, so I honestly don't know what to think about that. The Chiku span is pointing downwards. We've got a flat cloud here. I'm going to be very careful tomorrow. My 140 calls are going to expire and take away half of my shares, 300 shares, and I'm going to be happy about that. I'll have made my target, which is about $800 there, $800 or $900 on 300 shares. But let's keep a close eye on this tomorrow. The low volume is a bit concerning after having 4 days out of the last 5 above the 20-day moving average for volume. Thank you. Have a good day, and tomorrow is going to be interesting.